But to your point, it's never where you need to focus on, and that's where most people ask you is what's the trigger? And the trigger is never the important question. It's the foundation of the thesis because nobody knows the trigger. Now, some people may get a trigger right and then the other trigger right, but they're just lucky.
Welcome to another episode of the Kinvestor Report, where I chat with the industry experts to discuss the market, commodities, stocks, and the economy. As always, I'm your host, Arlen Hansen. Today on the show, I'm excited to welcome Tavi Costa, macro investor and mining entrepreneur and the founder and CEO of Azuria Capital. Previously a partner at Crescat Capital, he built a global following for his macro research and thematic investment frameworks, built a huge fan base for some of his calls. He's also the founding shareholder of San Cristobal Mining, formed following the acquisition of the world's largest silver mine, fourth largest silver mine. Tavi's regular feature in the Wall Street Journal, Barron's, and Bloomberg, and presented at the International Monetary Fund. A real honor to have Tavi here on the show today. Tavi, so great to meet you. How you doing?
Good. How's it going, man?
Yeah, really good, really good. We're gonna just start some high level, then dive down a little bit more. I do want to talk about the PDAC coming up too, as well, obviously, which is a huge mining event, the biggest of the year for a lot of the Canadian mining investors. But we're gonna just start super high level. Where do we think we are in today's global macro cycle compared to past commodity cycles?
This is a very strange environment we're in, just given I think a lot of people are seeing this as an incredibly difficult environment to be investing because of the uncertainty, but uncertainty is always going to be around us. I actually think that the level of constraints we have politically and given the imbalances we have from a macro standpoint, this might be arguably one of the least uncertain moments in history when it comes to, and I'm not trying to come across as a cocky or anything along those lines, but just from the sense of structural demand for a few things and the supply constraints we have for other things that are creating a bottleneck from a macro perspective that I think are going to become extremely relevant over time. And I'm referring to commodities and precious metals and specifically metals overall. It is hard to believe that this world will unleash all these issues that we're seeing in regards to the overall debt of the global economy without allowing metal prices to be much higher, given also their own fundamentals when you consider where we are in terms of the supply aspect of these resources. And so, to me, while there has been a lot of focus on AI and a lot of focus on who are the winners and losers about that world, which involves the whole world. I'm not trying to separate things, but I also think that the rotation into things that have been neglected for a very long time are way more important than the rotation out. And I used to be very focused on that side of the market, and I'm way more focused on currently on where the capital will come into. And this is why resources to me everything else is almost noise. I'm solely focused on that and this rebalancing into the rest of the world and how Latin America and other economies can actually benefit tremendously, not only from a commodity super cycle, but also from a rebalancing out of the US. And I just don't see a world where that doesn't happen just because of that. Not to be just because of things are so extreme from a dollar valuation, from US based assets valuation, and then on top of it, the imbalances I mentioned, that eventually the policy that needs to be run in the next few years has to be the suppression of rates and on top of it as well is the devaluation of the dollar versus other fiat currencies and versus other, I guess, hard assets. And so that to me is hard to find a path around it. Deflation, and those things are very unlikely to be changing here in the near future.
Yeah, so you're all in commodities is basically what I'm saying. I didn't think you were talking about Bitcoin when you were saying when you were saying big demand and not enough supply. What commodities in particular are you talking about where there's big demand? Gold, silver, copper.
I think that there's lots of focus on things that matter a lot less than what's been, uh, shown as potentially being important and relevant, which is rare earth, all these things that you don't need a lot of players into that space to sort of make it, create an oversupply actually situation that will hurt prices over time and businesses that are involved in this. Now, the biggest commodities that I'm focused on right now are, I guess, you can break down to a few places. I think one, metals. I like the scalable metals that I call. I mean, that's really gold, silver, copper, zinc, um, nickel, and manganese are going to be the ones that I think are going to be under structural demand over time. Manganese a little less than the others I mentioned, but I think those are businesses that are going to be formed around these commodities that are going to be through the cycle, right? And we're not talking about a year. I'm talking about 5 to 10 years from now. We'll likely be benefiting from this. Then the other bucket would be energy. I think oil and gas are on the brink of a major resurgence. I think we've seen some of that happen already. Lots of volatility, days that looks very obvious, and other days that looks like you're, in a painful situation. That's usually a sign that we're getting close to some resolution of that thesis. I think it's going to be a good resolution. So I'm focused on that part of the market. And it's always important. It's almost like playing chess, right? Like when you move the energy cycle, well, when you move the metal cycle and then you start moving the energy cycle, then there is a next domino to fall, if you will, or not fall, but actually um, have a beneficial situation, a favorable situation given this macro setup would actually be agricultural. So I'm starting to warm up to that because I can see that energy is getting some momentum here. And as soon as that takes off, I think the next place to look into is going to be agricultural commodities.
Right. And not a lot of people are talking about those right now. Right. So you're trying to like you're trying to figure out what's next. Right. So that kind of makes sense.
Yeah, I mean, macro, you always have your thesis that is working, hopefully,
Yeah.
working in your favor, and then you try to kind of plant the next seed. And I think there's a few options here around resources. That's where I'm looking at. Agriculture would be the place, but the breakout of copper is another thing I'm really focused on right now. But I would say also outside of that, there's a few other things that your listeners are probably going to go, all right, this guy's way too crazy. But there's a few things I think, and I play these things through derivatives because I don't know. It's hard to understand the unknown risk about these things, and so um, there's two things that I'm actually, or three things that I'm building a position on that are unrelated to resources, basically that are almost like hedges, but I feel I have very compelling reasons for why I think those three things will work out. They might shock you, but one of them is treasuries. I think long-term yields are going to fall substantially in the US. It's almost like they have to do that. There's not much of an option. A lot of people are focused on the demand aspect and so forth. I think it's a policy situation. It's nothing to do with the fact that we're going to see a structural bull market for treasuries, but no, it's just a setup that I think is very cheap right now to play on TLT call options and others for a year, 2 years out. The second place that I'm very, interested about but again, I don't know. The unknown risk here is much bigger, which is an invasion of Taiwan or something along those lines. But Chinese equities is something I'm been building a position. Every day I see this thing down, I add a little bit to my call options on MCHI ETF and others that are more liquid, that I can see a clear path to multiples of what is worth today. Again, I usually take a year or 2 years out of these types of instruments. Has nothing to do with resources, but more to do with a second, third order effect trade on the dollar weakening. And then the other play that I think it's also related to this second, third order dollar weakening idea is I like liquid stuff. So I play on the options market on the very liquid stuff. And so to me is Deutsche Bank and other, German banks and other European banks that people are dismissing, and they had a big run up and now they just sort of had a big correction here. And I love entering those types of markets as well. So those are my next seeds that I'm planting here right now, and they could become my next wave of that I'm gonna ride in the call it a year to 2 years out.
Okay, so I've never played the Chinese equities before. So me just being a retail investor, I want to get a little bit of exposure to that. How do I do it?
I just do it through MCHI, which is an ETF, highly liquid ETF, called options. That's what I've been doing about a year out, and I usually like to do about 15, 20% out of the money, 25%, sometimes 30%. I'll scale that differently depending. And yeah, I just leave it there and write it out. I think there's the reasoning behind being very bearish on China, which I was a huge part of it. I mean, if anybody who knows at least a little bit about my work back in the days, I used to be one of the biggest voices on against China and regarding economic reasons. I used to think that we would see a Lehman Brothers moment, which turned out to be right, and either we would see a fallout of their housing and banking system, or we would see a major um, devaluation of their currency. Turned out that the Lehman Brothers situation sort of played out, and those that were in that trade did very well. I'm on the other side of this. This is where my macro hat kind of trader takes over. Um, my bigger ideas, the places where I think I'm going to make my big wealth is not going to be on those trades. These are just my hedges on ideas related to resources. I wouldn't call them hedges, but just my diversification side of things. And yeah, that's all.
Well, it's good that you're diversifying. I think that there's a lot of people here when they get bullish on the metals and commodities, they go all in, they get over leveraged, and that's where they kill themselves, right? They can't hold the trade when they get that
There,
way
there are
too,
tr
right?
there and there are trades that are more cyclical and others that are more structural. Give you an
Hmm.
example, the Latin America trade and the metals trade are very structural, and so what does that mean? So when you get a structural trade like that, you either build a business around it, you build a strategy around it, and you keep coming in as you see corrections, right? Because you will see corrections. I mean, if you don't think gold is going to have a sell-off eventually of 20, 15%, you're out of your mind. It's going to happen. And miners will have some major corrections in the middle of a structural bullish environment. And so once you've sort of laid out what are the cases that you have here that have a structural bull market, a secular bull market, that once you get trapped into those sell-offs, I'm sorry, once you get into those sell-offs, you're not really trapped into, oh boy, I don't know what to do. I have my very clear vision on these things. Like, for instance, I'm not adding to my Brazilian trade. I've been very outspoken about Latin America. I'm letting these things play out. But if they come down 15, 20%, oh yeah, I'm gonna come in, right? I mean, that's sort of, I'm just waiting for those things to, I wait for these things to sort of come to my way, and then I'll bet on again. And hopefully I'm selling my Chinese equity play a year from now, on a major profit to deploy back into a correction into Brazilian equities. I would love to do that. So that's sort of the way my brain is thinking about these things.
Yeah. Do you think you can find a time in history that we've got a close analogy to right now? Like,
Hmm. I don't think so. Maybe. I mean, the closest probably the 40s and the 70s, but then even that is just too crazy to think that that's like I love the 40s, but the 40s we were packed with gold prices. I mean, that is going to be more different. Like if you're comparing that with today, how in the world do you want to say that what happened with resources and hard assets at that time is comparable to now? I mean, it won't be because these guys are unleashing capital every day on, on every crisis you have. And to I used to be the doom and gloom type of person that look, I think there's plenty problems that could become very problematic here. Problems that could become problematic is not the right way to say it, but many issues that could spread to become real problems over time. But at the same time, the policy maker behavior towards these issues is, to me, even more relevant than that. And I think we crossed sort of the Rubicon back in COVID recession times when even I was shocked. I mean, anybody who claimed to you that they saw this type of bazooka coming, I think are not right. Like this is, I mean, I also thought we would see some level of expansion of the money supply, but come on, like what we saw was absolutely insane. And so once I saw that, I remember having the call on inflation that everyone was, oh, it's not going to cause inflation and blah, blah, blah. I mean, I remember buying energy and other things at that time just because it was the obvious trade to do. And oil was going negative. And I remember when oil went negative, the whole market actually declined on that day. And the energy sector was up. There was only sector up on that day was energy. And so to me, that was like, all right, if the energy sector cannot fall on a day where oil prices are down, it's because something is going on here. Smart money has figured this out. And so, yeah, I mean, there's clues in the market every now and then that you can kind of be attuned to. I think people that are very attuned to macro have the tendency of do very well in this probably in this next 10 years because it's going to be all about that in my view.
Well, Rick Rule says we have no excuses not to be billionaires in this cycle.
I
I don't.
agree. I didn't hear that from him, but honestly, I agree with him on that. That's
Yeah.
absolutely right. I mean, is it that uncertain? I mean, come on. Like it is
I'd,
always uncertain and things are going to fall and rise, but come on. I mean, the imbalances are just too big. I mean,
I'd even go as far to say is that Vancouver is probably going to create some of the first trillionaires out there with mining companies and mining
uh,
executives. Like it just,
that and yeah, this is such a niche part
yeah,
of the market that
extreme wealth
um
could be made.
extremely well, and it's not just mining. Mining will be one of them. There's going to be how about like I think I have an edge in South America and try and play that edge, but I don't have an edge in places like China, not China, necessarily Asia. And I think the expert of that region could do extremely well too. I mean, the expert of Greece could do very well. And there's going to be plenty places to make money here. I don't know if AI would be the place to be making money personally. That's not where I shine. Like I acknowledge that I am awful at figuring out what's the next technology and how to invest in those things. That's just not my thing. So,
I want to interrupt you in there because I think that's an important point. Is like, yes, I see opportunity in the graphites, in the kind of critical mineral space, and the things that are outside the gold, copper, silver story. Okay. But like how many people are willing to roll up their sleeves and actually learn about it when the opportunity, when something that they understand as simple as gold, silver, and copper are right in front of their faces?
yeah, and I don't think you have to reinvent the wheel in these situations. I mean, if I basically built my career on making a few contrarian calls that I, that were either cyclical or structural, that I, not only deploy capital accordingly and make money on it, but also heavily created research around it that was very unique. And I'm saying this because for those that are out there that are looking to create a name for themselves, these are the types of opportunities. Like there's going to be so many. if you think about the rebalancing out of the US, let's say a person is from Italy, like try to think about what are the optionality of capturing some of that flow out of US into those areas, because it will happen. And there's going to be lots of these different types of opportunities elsewhere. And trying to figure out what is your niche place, and really forming a thesis behind it. I think it's going to be plenty. I mean, that's my biggest advice to a young person for sure. It's not just looking to be contrarian all the time, but it's much easier to be an expert of something nobody's an expert of than becoming an expert of a sea of people, basically covering the same space. I mean, good luck with that. So yeah, that's kind of how, sounds simple and easy, but that's kind of how I did it. I mean, how many people were covering metals and mining back in even in like 2018, right? I mean, 2018 wasn't too long ago, but the industry was dead. Like the people that were there are just exhausted, done, and now look where we are. And so, am I an expert of it or not, or am I just opportunistically trying to find these ideas? Right? And I like to think that way instead.
Well, like this is a good conversation because yeah, you were banging the table there a lot louder than a lot of other people were, right? And yeah, you can look back and go, wow, that sounds so easy. And yes, oh, look how well Tavi's done so quickly. But like I just want to tell people how hard it is and how lonely it is when you're sitting there and you're the only one banging the table like this and everyone else is betting against you. It's not easy to make those calls and stick to your guns with it to make money on your calls. You have to have such conviction, right? Especially when the rest of the world is yelling at you. So good on you for making those calls, right?
Let's use today as an example then, right? Like if you talk about buying Chinese equities, how many people in the audience are going to say this kid is crazy? I mean,
I
what is it?
Not one person on my show has said I'm buying China, like not one, not one. So I'm listening to this very, very closely, right?
You
Like
know,
go where people aren't, right?
uh, uh, or Deutsche Bank and other,
Yeah.
European banks, that these are ideas that, you can make a career on this if you get it right.
Well, you only need one good
So
pick. Like you really only need one good pick to be done for the rest
yeah,
of your life. Like I don't need to be
that's
a
right.
billionaire. I don't care. I don't need billions. Like that's just like my worst nightmare. Giving me with that much money. But yeah, you really only need one really, really good thesis that you stick behind and really believe, and you probably don't have to work again.
Yeah,
Right? But you gotta be rolling up your sleeves and doing the homework, right? So okay,
that's right.
I got super rapid fire questions. We're gonna go in just a few minutes here, Tavi. I've enjoyed the conversation, but just super rapid question. Gold or silver over the next 24 months?
24 months, not 12.
Yeah,
Oh
I'm
man,
going
this
long
is
term, man.
brutal. I don't know this one.
I'm not holding you
12
to it.
months, I would go with gold, but 24 months, definitely probably silver. Um, I think we'll see, you know, very established three digits in silver eventually here. Not eventually. I mean, like I know we reached there, but I'm talking about very established three-digit numbers.
The new norm.
And yeah, I mean, I that's the way I'm operating under my modeling assumptions of what miners are going to do in the future. Yeah.
Yeah, cool. Developers or explorers?
Hmm. 24 months probably explores.
Okay. Energy or metals?
24 months, I'm going to go with energy. I hate
Uh,
that call. That's
I kind of
brutal.
agree. I kind of agreed with you. I dusted off a bunch of my gold and silver mid-January, and started buying the gold and like the oil and gas stocks. Just was like everything was so frothy. And I'm just like, oh man, I'm gonna be positioning something. So I like that call. Good call. And then most overlooked commodity today, do you think?
Overlooked, it has to be rare earth. Yeah, probably rare earth.
And I'll go, is that just because people don't understand them? Like I'll go back to that thing where people don't understand rare earths, so they just don't want to do the homework.
Overlook in the sense of, in what sense exactly are you referring to? Just so I get the question.
Just like investors aren't opening up their wallets for the names. Like they're not getting good multiples. They're not getting, they're just being ignored. Yeah.
Yeah, I would say zinc in that question then. Rare earth is the opposite of that. Rare earth to me is just overly hyped and not interesting at all. I would say that zinc is one of them. Yeah.
It's hard to find a
Yeah.
true zinc discovery, isn't it?
Well, discovery is hard. However, you can control the market with not a lot of capital if you're a major in the space. And I think there's ways to do that. Yeah, that could be very strategic.
And lastly, one chart every investor should be watching right now. And I'm just going to say maybe the Chinese equities, but I'm not going to put words in your mouth.
Chart everybody should be watching right now. I have one, but it's a macro one. It's not necessarily a trade. It's more of a, I think it's the interest payment to GDP of the US versus the rest of the world. And you're going to find that the US is paying around 4 to 5% of GDP. Rest of the world is at 1, 2, or even below 1%. And so that chart is where it's the most important chart, in my opinion, for policy making, because you're going to see the sense of urgency of the US having to lower rates relative to the rest of the world, which will have an impact on the dollar and so forth. And then the second one that I would put on that would be the DXY index, potentially breaking this major support that we've seen over the last 15 plus years. And I think it's going to break big time. That's just my very strong view. Eventually, I don't know what causes the break, but it could be some sort of news that just causes a major break, and that's over. I think then it basically officializes the beginning of a multi-year decline on the US dollar versus other fiat currencies, not just versus, which then triggers emerging markets and other things, and it's a whole different thing.
It blows my mind over my last 25 years how often the event that turns markets around is something that we never think of. It's just
And it's
something.
never, to your
It's
point,
that, right?
but to your point, it's never where you need to focus on, and that's where most people ask you is what's the trigger, and the trigger is never the important question. It's the foundation of the thesis, because nobody knows the trigger. Now, some people may get a trigger right and then the other trigger right, but they're just lucky. What, and I've been right on triggers too, and I've been just lucky. I have no edge over that. Now, I think that finding the foundation of a thesis is way more important than finding the trigger. Focus on that, if I would say one thing. Yeah.
There you go. I'm going to drop the mic for you there on that one, Tavi. I like that. Good one. Awesome. Tavi, thanks so much for your time today. I hope to bump into you at the PDC if you're walking around. Be great to shake hands and grab a coffee or whatever we want to do. But yeah, thanks so much for your time, Tavi. I know you got a call to make, so have a wonderful day.
Happy to do it. All right, man. Take care. Keep
We'll
going.
chat again. Yeah, bye-bye. Tavi, that wraps it up for today's episode. Thank you so much for joining me on the show. You can stay up to date with Tavi and his work through his X account at Tavi Costa or at azuriacapital.com. He's certainly one to follow. If you haven't already, be sure to subscribe to our channel, follow us on social media, join the Kinvestor Network. Just to get this in here now, the Kinvestor Mining and Energy Conference returns March the 26th, our annual virtual event featuring top companies across metals, minerals, and energy, plus a dynamic silver roundtable discussion with industry experts, including Chen Lin, David Morgan, and Peter Krauth. It's sure to be an event you don't want to miss. You can register for this conference at the link in the description below. Until next time, I'm Arlen Hansen.